Hey, good morning, everyone. Sorry I didn't get a video out yesterday. We got kind of tied up on some other stuff yesterday afternoon and just didn't get it out. So here we go. This will be real short. Um, so yesterday, corn had this. This is Dees 24 corn here. Um, we'll jump through all of it. You can see this big descending triangle. We'll zoom out here so you can see where this started. This is from the summer rally down. Here's the uptrend line from the summer low or from last May's lows. Here we are coming right up to the bottom of it. Here's the secondary downtrend line. So you see this point coming to an end here, right? Yesterday we had a big outside day down where we took out. Yesterday was Wednesday. We took out Tuesday's high and low, closed below it. That's a double close key reversal. We reversed right at the 61.8% retracement level of this move to the upside, and we haven't quite yet busted out the bottom side of this. We do have some weakness here this morning, and so we're putting pressure on the lower end here. I don't know if it's going to hold or not, but right now, this breakout is going to come, and I can't tell you whether it's going to come to the downside or up. I think it probably is going to look something like this, right, where we're going to come down and then we're going to rally back up through it at some point in the coming 45, 60 days, somewhere in there. So we just want to be real careful here and make sure that we do have protection on, because there's no reason that you got to have a catalyst to rally a market, especially in a carry. So we've been talking a lot about re-ownership of old bushels. Here's the 24 corn. We've been talking a lot about re-ownership. We've been talking a lot about, do we sell 24? And I think the best position, honestly, is to be hedged in 24 and sold in 23. And if we start to get a little movement up out of here, up above the daily cloud, then put some long positions back on. So from an algorithm standpoint, our algorithm's not going to do anything until we get some higher prices up in here, or a sustained down move that gives it a buy signal. So it hasn't stepped in to buy this thing yet. In fact, it's going to sit there and hold short position. So I don't see any reason to be overly optimistic in the corn market at the moment. Let's look at beans. Where did that go? Well, let's just do it this way first time. All right, here's January beans. Get this off of here. Here's January beans. Put on our trend channels. The trend channel off of the low from mid-October looks really pretty good. So you got to snap it right to this high right here. So we're trading right back to the bottom line of it. This is okay. This is a throwback, but what we don't want it to do is get below the midpoint of this line. So let's call it 1363. That's where we want it to hold today, 1360, 1363, somewhere in there. That's the midpoint of that base channel. That's where we want it to hold. And really, we want to see a reversal pattern and get up and out of here, because that is what would ignite a more sustained rally to the upside. So what's driving beans? I mean, hey, we are tight here, but we're also looking at South America, and we've known about the weather down there now for quite some time. So it's either going to get worse and prices are going to go higher, or it's going to get better and prices are probably going to come lower. And you have to remember, beans, even though they're tight, are now sitting against a pretty bearish fundamental outlook for corn. If you start looking at next year's balance sheet and you put those numbers in from an acreage perspective, anything above 90, and we get really, really burdensome. So corn could go from a 2.1, 2.2 to 2.5, 2.7 pretty easily, or worse. And so beans can pick up acres here without going a lot higher. So that's part of the problem and part of the changes that we've seen. Here's November of 24 beans. Why do they keep doing that? Let's I don't know why it keeps losing it. Here's November of 24 beans. You know, we'd like to see those get higher too. But again, this is really impacted by that weakness in corn, because it just doesn't have to work a lot higher in order to attract acreage. So keep an eye on that. I'm not going to step in here and do anything quite yet with this thing. We're close to another signal, but not yet. So we'll just sit there and be patient with it. And now Kansas City wheat. I'm going to go to July 24, Kansas City wheat to look at that. You know, it just keeps sitting here getting beaten, just beaten down. Any attempt to rally just gets sold. So you still have this selling pressure with these long upper shadows. You would think after this move up, it would have at least tried to challenge the high there, and it just didn't. So it looks to us like wheat is maybe getting ready to work a little bit lower. Now, I don't think that it like drops to $4 or anything like that. I just don't think that the fundamentals are there for that, and these divergences continue to grow. So another push to the downside will trigger some actual buy signals in here, and that's what we want to see. So we're going to be pretty patient with wheat. We're going to let it develop, but we're not going to rush to be in the sale mode yet, because I think we're going to get a shot at higher prices, particularly if corn can get a little bit of strength and beans can get a little bit of strength. I think that really supports wheat moving forward. So patience, patience, patience on wheat. Corn we're a little bit nervous about, but we're going to stay patient with it. And beans, I think we covered that pretty well as well. All right, so it is Thursday. We'll be back with you either tonight with another video or tomorrow for sure. And I apologize that this didn't get out last night. We'll talk to you later. Have a great day.